Rupee slides to record low. On budget day. Currency wars? Tax on capital gains raised by Modi 3.0. Did 2.5% LTCG tax hike lead to rupee slide? Rupee declined to 83.71 to the dollar. Market reacts to union budget. Stock market declined after budget. Nifty? Sensex ended trade in the red. Did budget bring gloom to Dalal Street? Why rupee slid after tax change proposals? The Indian rupee slipped further even as Finance Minister Nirmala Sitharaman announced her record 7th budget. The currency declined even as the Indian markets saw red too. Experts suggest the hike in capital gains tax and the pressure on equity markets caused the slide. The Union Budget for 2024 proposed hiking the long-term capital gains tax on all financial and non-financial assets to 12.5% from the existing 10%. The short-term capital gains tax on some assets would be 20%. On the other hand, the exemption limit for long-term capital gains tax has been increased to Rupee 1.25 lakh from Rupee 1 lakh. The budget also announced that listed financial assets held for more than a year will be classified as long-term. Finance Minister Nirmala Sitharaman said that the government wanted to simplify the approach to taxing capital gains.
Yes, your question is on the point there is we wanted to simplify the approach to taxation also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets.
Soon after Sitharaman's announcement, the rupee declined to a record low compared to the dollar, inching past the previous lifetime low of 83.67. Before the budget was presented, the Indian currency was trading at 83.62 against the dollar. The stock market also declined after the budget announcements, which analysts said could hurt the markets in the short term. Market watchers would also be looking at the economic data. The economic survey, which was tabled in Parliament on July 22, projected India's GDP to grow at 6.527% in 2024-25. The projection is down from a high of 8.2% in the preceding financial year. The projection in the economic survey is lower than the Reserve Bank's growth estimates of 7.2%.